Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Okay, welcome to another episode of Crypto for Advisors from Synergist. And today I'm really excited. I've got Lee Eaton from Independent Reserve joining me today. And Lee's one of these guys that knows everybody in the industry. And in fact, I remember the first time I met Lee, I went up to him and started chatting to him like we're old friends because I've seen him so many times on podcasts and presentations and everything. I felt like I knew him and he looked at me like, who is this guy? Because we hadn't actually met. Do you remember that, Lee?
Good. Yeah, sure. I'm sure I've seen you. I'm sure I felt the same.
Oh, you're being generous. So Lee is the National Head of Sales for Independent Reserve. And Independent Reserve are one of the, I guess, the OGs. The original crypto exchanges have been around for 12 years now. I think you're celebrating your 12th year, which really does make you one of the early adopters or the early players in this space. And that's that gives you a wealth of knowledge and experience that puts you in a really great position to be a commentator on the market. And I'm sure at the moment, the market is probably looking completely unrecognizable to what it looked like, say, 5 years ago.
Absolutely. Yeah, completely unrecognizable. Yeah, I mean, where to start? I mean, I guess 5 years ago, we were just sort of seeing, I guess, the first, real kind of evidence of mass adoption. Anything prior to sort of 2020, 2021 before COVID, and of course, a lot of people started getting into it, was pure. It felt a lot more along the lines of what I guess people typically think of crypto being, at least in the early days, guys on laptops trading. It was definitely more of a Wild West. Crypto, certainly, everyone calls it the Wild West. I don't know if that's actually necessarily true anymore. We have some of the largest institutions in the world now participating in the industry. And again, look, 5 years ago, none of them were here, so it has come a long way in a very short period of time. I'm happy to tell you any sort of stories from back in the day you'd like to hear.
Oh, I'm sure I'll look forward to hearing a few as we go through the session today. But yeah, I think 5 years ago, there was a great one that that I often reflect on is JP Morgan. Jamie Dimon, the CEO of JP Morgan. That I think 2018, 2019, it was when he came out with his pet rock call, saying Bitcoin's just a pet rock, and basically he said that if he found any of his staff trading in Bitcoin, he would sack them. And now, just in the last sort of 3 months, they've announced their own stablecoin. They've allowed Bitcoin and some other key tokens to be used as collateral for their lending. They've completely, done the 180-degree turn, and they were the last of the big institutional players to really do that as well. So, it's amazing how the market's evolved.
Yeah, JP Morgan has been, funnily enough, one of the, I guess, market leaders, at least in terms of using blockchain technology, specifically the development, as you mentioned, of its own stablecoin, JPM coin. Now, what's really fascinating about that JPM coin and just the stablecoin market in general, I think for a lot of the audience, they probably all heard of Bitcoin. They might have heard of USDT or stablecoins in particular, but they may not be aware of just how much evolution that segment in particular. Certainly, there's been a lot of development in the Bitcoin space when you think of the Bitcoin token, but the stablecoin market itself is probably the most unrecognizable element of the whole crypto industry that was just didn't even exist kind of before 2021. It's unrecognizable. And what I mean by that, for example, is the race is on now amongst US banks in particular to start producing US dollar backed stablecoins. So a US dollar stablecoin, or any stablecoin for that matter, is a crypto token that is backed one-to-one by a particular asset, in this case, a US dollar. So one crypto token, in this particular case, the JPM coin, is always redeemable for $1 US. Now, what was kind of really interesting about this is, yes, they're still finding a way to fit Bitcoin into their general sort of, I guess, portfolios. But what many of your audience might be really surprised to hear is that JPM is really pushing hard for adoption of its own stablecoin amongst Australian banks, other banks globally. So it's been around now actually for a little bit longer than the last 3 months. It's been around for about a couple of years now. And they were using it internally to move funds from their own branches within Europe and the US. But now, because we've seen a lot of changes, particularly with the Trump administration bringing in some pro-crypto legislation, particularly around the use and development of US dollar stablecoins, we're now actually seeing a situation where Australian banks are getting hit up by large US banks saying, hey, it's time for you to start using my crypto token. So believe it or not, but it's happening. And these are conversations that are real and happening as of today. And there will be, I guess, for all your audience, a time where, where they're making payments nationally or using a bank, and those behind the scenes, there is crypto powering those transactions.
And this is one of the things that a lot of people don't really understand. They think crypto and they think of some, meme coins or speculative sort of investors just having a punt, but really it's the technology behind it that's the real story, isn't it? It's the blockchain distributed ledger technology and how that's actually fundamentally reshaping significant sectors of the industry, and financial services probably being the main one, but not just limited to financial services, logistics and real estate and a whole bunch of sectors. But 12 months ago, stablecoins, the use case of stablecoins was really just you wanted to be able to settle into something that looked like something that was familiar to you, like a fiat, US dollars or Australian dollars. If you're buying and selling crypto, you wanted to settle into something that was, dollars, of some sort, rather than just trading from one token to another. But over the last 12 months, you're right, stablecoins have really been recognized as a global payment system, as a much superior global payment system. And now stablecoin transactions now are greater than the entire network of Visa and MasterCard transactions combined. And this has all happened in 12 months. And so what's behind that? What's the value? What's the positive use case for these institutional banks, in this case, like JP Morgan? What's the benefit to them? Why are they adopting that technology?
Yeah, look, the way I think I could probably answer that best is to give you a little bit of an anecdote and just follow up on one of your comments. Back at the end of 2021, so the last kind of, peak of the bull market for the last cycle was in sort of November 2021. And so in early sort of January of 2022, and people will remember that 2022 was quite a bad year for crypto. We had the FTX and the Terra Luna incidents, which kind of wiped out the market for 18 months. But before all that had happened, I remember Lasanka, who's one of the co-founders and now the CEO of our Singapore and much of his leading our expansion effort in Asia. We were sitting down and having a conversation about what we were going to do for 2022. We're planning out a year ahead. Which segments are we going to look at? Who we're going to target? One of the industries or one of the verticals we weren't even considering at that time was the remittance space. So people who were, sending funds internationally, that wasn't even on our agenda. Yet by the end of 2022, it was around 80 or 90% of our new business. Right, and it came on from a sales point of view. Now, why that's sort of crazy is it shows you how quickly, technology can be adopted and how quickly the market is developing. So, like I said, we weren't really aware of it. But what had happened on all these guys who had been using, batching up funds and sending their clients funds to, places like the Philippines or, India or China or whoever else, and they had previously been using the Swift network, and they're, in a 24/7 world, they're expecting, cheap, instant kind of movement of money. And anyone who's moved money internationally knows that that's just not the case. Yet what these businesses were working out is that, hang on, US dollar stablecoins are a perfect way for me to send. I can batch up money in Australia. I can send it anywhere instantly, nearly for free across the globe, and off ramp it nearly in real time, right? And so it just came down to the fact that it was just faster, more reliable. It worked 24/7 and it was quicker. And so, that was the killer use case right there and then. And it's just been growing on a steady, up and to the right only. And now sort of, predominantly our business, particularly in Asia. Now, I must admit, Australia's a little bit behind in this. We see a lot of what we call maybe on-ramping, where people are taking money and sending it offshore using crypto. And so where I'll get to where this matters for the banks as well, because traditionally that market had been controlled by banks and the FX market and the Swift network and all this kind of stuff. Now you've got a technology which allows kind of individual businesses to do that. Mm-hmm. Right. And so particularly in Asia, where perhaps they don't have as much of quite the banking, capital moves freely, but they probably don't have quite the luxury of the banking infrastructure we have here in Australia. It is even on a larger scale than we're seeing here in Australia.
Yeah.
And it is such that I guess just the necessity being the mother of all invention just meant that people were flocking to it. And it's hard to describe the scale of it now compared to where it was. But I guess if you're like, for example, JP Morgan looks at this and they look at companies like Tether, which produced USDT, or they look at Circle, which is now a listed company in the US using USDC. And they're saying, hang on a second. You guys are capturing this market and people are using your token for another market that we capture. Hey, we would like to be involved in this. So the US banks are now, there's an arms race, can I call it that? Particularly given some of the clarity. In fact, one of the bills for the US introduced was called Clarity, the Genius and the Clarity Act. Those bits of legislation are providing a framework that says, okay, here's how it's now enshrined in law. The arms race is on now for the banks to build that technology and get everyone to use their coin. So it's not a question of will people use it? The question is how we're going to fight for who's using our coin versus other people's tokens. And this is all in the space of 3 years. Really, we've gone from just individual businesses using it, I guess, to now the largest financial institutions in the world really fighting for this space. Yeah, that's 3 years. So let's check again in another 2 or 3, and we'll see what it really looks like.
Fascinating. And one of the things that the benefits that you hadn't mentioned in amongst that is probably the cost as well. And
yeah, absolutely.
the cost
yeah,
is a fraction of the price to send money with. Otherwise, you're sending large amounts of money. It can be extremely expensive. Lawyers and not just your transmission fees. But just listening to that, it's just another example of one of the unique features of, well, not unique features, but a very distinctive, unusual feature of crypto and blockchain technology is the grassroots adoption leads take up. So normally, especially in financial services, new instruments or products and services are usually conceived at the top of the hierarchy, used, at the institutional, federal sort of sovereign state level, and then filter eventually down into retail products and services. But this has gone the opposite way. It's fascinating to hear that it wasn't actually conceived or, to do the use case that it's holding now. It was just, there was convenience to sort of use it as a bit of liquidity within the crypto circles and assisting on ramping and off ramping. And yet retail segments of the market saw this as a positive use case that, hey, if I'm sending money back to my family in India or something, I can do it much quicker and much cheaper by doing this. And the market actually found the value and adopted it. And now the institutions are playing catch up, going, we can see all of our legacy business eroding rapidly in front of us. How do we stay in the game? How do we retain our share and stay relevant in a market that's getting disintermediated in front of us?
Correct, 100%. And look, I really struggle to sometimes sort of convey what it is that draws people into blockchain technology and why people get so excited about it. Because it's very easy, I guess, from a casual observer's point of view, to look at some of the more silly stuff like Dogecoin or the meme coins and be like, oh, isn't it all just stupid stuff? Guys on their internets are trading, guys on their laptops are trading on the internet, and it goes up and it goes down. It's all worthless. And I think that really misses the really key fundamental point, which is, if you can't really see until you participate in it, is that fundamentally the difference, I believe, is that Bitcoin was created as an open source technology. So when this idea of a blockchain was created, and there's a number of ways I can describe it, but the point is that it was open source technology. So anyone who was like, oh great, there's this new technology, I can just take that and create it, adopt it, change it, do whatever I want with it, and I can experiment with it, and no one can stop me. It's kind of like the combination of like a peer-to-peer software and encryption and the internet all mixed together to allow you to kind of move value without a third party. Simple way to put it, but it's open source, so anyone can do whatever they want and they can try a million things out. So what we've seen is this kind of Cambrian explosion of people experimenting with different ideas and using their technology to apply in different ways. Whereas I guess traditionally, if a technology might have come out of CSIRO or Microsoft, it's not open source. They're very protective of the IP, right? And so it's only a limited group of businesses and people who've got the resources to kind of either develop it themselves or know it, to be able to then use it and apply it. Whereas open source technology like this has meant that anyone who's good with computers can kind of take it, copy paste it, make a few adjustments here and there, and it can evolve so quickly. And it's amongst everybody. So the crypto community is really kind of this kind of pioneering bunch who just kind of go, here's this technology, let's experiment with it. And so a lot of these meme coins, what I would probably categorize that as like, it's a little bit of humans' desire to gamble and experimentation, right? Because it's not like a centralized system. Anyone can jump on there and create a token and do whatever they want with it. But of course, in amongst all the kind of sillier stuff that happens, and that's the stuff that grabs headlines, there's the real business of the people like Tether or the USDC and now JP Morgan who've gone, what we can actually use is for a viable real world solution, right? And that sort of stuff happens always in the quiet. It doesn't happen in the mainstream. That stuff that doesn't reach headlines. It's not sensational enough, but it's been going on for a long time. And so people who've been in the industry for a while have kind of seen these, like the legitimate side of it, and gone, hey, this is actually really awesome. There's great businesses here. There's great ideas for efficiency and innovation and new ways of doing business, which we have the potential to do, but they're being built in quiet and they don't grab the headlines. But once you're in the industry and you see that, you can kind of ignore a lot of the noise. And I guess for people like us, we're trying to do our best to educate people that, you got to come and have a look at the real stuff that's happening on, because the headlines are always going to be sensational a bit. They're going to lead you in the wrong direction as to what's really happening.
Yeah, and it really comes down to, who you're talking to and why they're interested. I mean, we tend to default our mindset, I do anyway, to I'm talking to a potential investor, somebody who's interested in crypto as an investment, from an investment standpoint, comparing to, should I put some of my money in crypto, or should I put it, keep investing in Australian equities or international equities or alternative investments, whatever it might be. But a lot of people use crypto for other purposes beyond money, beyond investing. They can build businesses like DeFi, decentralized finance businesses using this technology. They can restructure their operations if they're a logistics business using distributed ledger technology. They can get reliable and accessible basic banking services if they're in a country where potentially they're in an economic and political situation where that's not taken for granted.
Yep, 100%.
And so there's all these other use cases for the technology that is really what has driven the underlying value. But from an investment point of view, we've been talking a lot about stablecoins, so I'll keep on that for a bit, and then we can maybe move across to some of the other elements of crypto. With stablecoins, you mentioned the Genius Act. So we've just had the Genius Act get passed. It passed the House, it passed the Senate, and it's been signed into law now by Trump on July 18, so just recently. And it's there to basically legitimize stablecoins as a desirable, not just a viable, but a desirable infrastructure system, for financial services globally. If you unpick why Trump is really interested in this, partially, I think initially, my read is that he initially was interested because he saw the opportunity to sort of attract, repatrianize, US-based people who have left the US to innovate in this space, to incentivize them to come back and try and build an economic growth engine using this technology from the States. But then I think if you look at what happened with tariffs, and he started seeing 10-year bond yields go the wrong way, and he started getting, panicking a bit there, or maybe not panicking, but it was like, there was a sharp intake of breath, and he pulled Scott Bessent into the room and said, "What do we do?" And I think that's when they sort of the penny dropped that, hang on, if we can back these stablecoins and encourage stablecoins, guess what? They're all underpinned by US dollars. So
Exactly.
the more money that's flowing through stablecoins, most of them are US dollar stablecoins. Guess what all those stablecoin providers have to do?
Huge
They've got to
buyers.
go buy 10-year treasury, right? They've got to buy US dollars and hold dollar for dollar. Now it's in law, dollar for dollar, whatever they're transacting through their stable coins through blockchain. It's got to be sitting in a vault somewhere, in treasury or gold, potentially Bitcoin, but it's got to be denominated. So that is actually creating a massive new demand for his 10-year yields, which is what was starting to drop off a cliff.
100%. Look, I'm glad you brought that up. I remember looking at this, and I know Besant, when they looked at this originally, they did some modeling, and they were expecting it was like a 10 or 12x in the short term. They didn't specify what the short term is of the adoption of stablecoins. So it's currently, $85 billion market or something like that at the moment. And they're expecting that to sort of 10x over the next short term, whatever that is. But you quite rightly point out, I mean, they are a huge buyer of US treasuries. And if there is, we know there's huge, I mean, we see it on a daily basis in Asia. There's a huge demand for US dollars, huge demand. South America, Asia, huge demand for US dollars, because even if, as far as the fiat world is concerned, it's still seen as the reserve currency. People want to use it. US and stablecoin, the on-ramping for stablecoin is as often as difficult as having a smartphone, right? And you just think about it, there's just so many people who are going, well, okay, we can just trade in stable coins, and you know, the demand really underpins the US currency as a reserve currency going forward for many, many years. Now, if you think about it, just the physical infrastructure it takes to go and set up a JP Morgan, somewhere around the world, or set up a branch in somewhere in Latin America, or set up a branch even in Hong Kong and maintain it all around, South Korea, or, Vietnam or something like that. Super expensive. But for them to adopt JPM coin or a thing just requires them to have, some crypto wallets on their account. It's no more, and the internet and telephones are going to reach their market a lot quicker than they physically can. And so from a distribution strategy, crypto is a brilliant tool. And so I can understand why the US banks are so keen on participating in this.
Yeah.
And I've made this comment before, but for the advisors in the room, look, we've had discussions with pretty much most of the major banks, even in Australia. And they're still hesitant about, I guess, retail participation in crypto for a number of reasons, which we can touch on later. But they were all interested in, at one point, pretty much all the banks were looking at their own AUD stablecoin projects. Banks being a bit big and cumbersome and, dare I say, bureaucratic? I don't know. I've never actually worked for a bank, so I can't really say. But they all kind of got canned. All those projects kind of got canned. I mean, we spoke to the people, we knew the people, and this is what we were told. Is pretty much they all got canned. But now it's kind of a little bit on the shoes on the other foot, where they're kind of being forced to, because the US banks are coming to them and going like, well, hey, I know you like trade payments and all this kind of stuff, but how about you use our US dollar stablecoin for that? And so the banks are going, well, no. Trade payments is our business, and now because of this technology, well, the US banks can be like, it's also our business, which means if they don't innovate and start using, I guess, creating their own reason for people to use their own stable coins, they'll be forced to use someone else's stable coin, which is a real direct threat to their own business.
Absolutely. And that's last week I know we are talking a lot about the US, but unfortunately, our economy is kind of irrelevant in the scheme of things compared to the size and scale of the US. So a lot of the market is driven by the US, and our regulatory environment is obviously lagging, shall I say, or operating much more slowly, much more carefully, much more prudentially than what we've seen in this year from the US. But last week was called Crypto Week, and there was the Genius Act. There was a number of legislations that were showcased, and I remember back when Trump first came into office in January, and one of the first things he did is he put David Sachs in charge of a crypto working group. And he said, you've got 180 days to come back with guidance on stablecoins, Bitcoin strategic reserve, and a regulatory framework. And so that deadline was yesterday, 30th of July.
And they've already passed the law. It's incredible.
But the report has been, so a 166-page report got published yesterday, because you're right, most of it has already been pushed into the market and priced into the market. But one is Genius Act, which we spoke about. The other is the Clarity Act, which provides, a regulatory certainty to say which regulatory bodies in the US have got jurisdiction over what, and how can we, what's the ecosystem here, the rules to play for digital finance, digital assets in the US. And then the third was the Anti-CBDC Surveillance Act. So basically saying, we're not going to set up a government-owned centralized digital currency. And the final one was the Strategic Bitcoin Reserve, which, they've said we're going to hold on to, obviously, the 200,000 Bitcoin that we have. We're not going to sell it for 20 years. And we're not going to buy any more using taxpayer money, but we are going to look at how we can grow this in other ways. If we look at we've spoken about the Genius Act. If we speak about the Clarity Act for a minute, going back to your previous comments about retail banks wanting to get into this space and actually seeing, this new technology cutting their lunch a bit. And now they've got regulatory clarity around things like being allowed to custody crypto on their books rather than having to hold. If they previously they had to hold, if they're holding crypto as a bank in the US, if they're holding crypto as on their books, they had to treat it as a liability, as a negative. But now they can treat it as a positive. They can say, yes, you can use this for collateral, as collateral for your loans. We can custody it for you potentially. So they've now got that clarity where they can actually interact with this technology and start offering products and services. What impact do you expect to see in the market? Let's just say in the US to begin with, over the next 6 months. Do you think that we'll see a wave of these offerings hitting the market, or do you think it's going to take more time?
It's a good question. Look, it's a good question. I could only guess, really. I can really only guess. I mean, one thing I can tell you is this market is generally new, feels like it's brand new every 3 months.
Mm-hmm.
Things move quickly, and that's got to do with just the distribution of this technology. So there is I guess, the banking side and how long it takes for a bank to go through their multiple levels of, compliance and, checking and checks and balances and all that kind of stuff. I think that is probably the largest holdup when it comes to this new technology. If I look at the way the private sector and crypto companies have rolled these types of products out, the time to market is probably a bit shorter than it typically would be with the large banks. But once those products are out in the market, they spread like wildfire.
Yeah.
So the question is probably not how quickly it will be adopted once it's available. The question will be how quickly is it available? Does that make sense?
It does, yeah. The interesting thing about that as well is like, is it going to, we default to our thinking around saying the established players in retail banks, for example, that they're the ones who are going to bring out these products and services. But there's an alternate as well, which is that the actual crypto providers like Independent Reserve, for example, might start bringing out banking products instead. And so, are you going to bridge that gap from the banking side? Or are you going to bridge that gap from the crypto side? Are both going to start coming in and offering the same sort of things? And that'll be fascinating to see that evolution and to see how the products and services might differ depending upon which side they're coming from and where customers adopt.
What's fascinating about that question is it comes down to the fact that crypto, US, we'll call it Bitcoin or stablecoins, if you think of it like the native currency of the internet, borders mean a lot less. And right now we have access, everyone here has access to the internet, obviously. And, right now in Australia, we're an Australian service provider. We're still subject to Australian laws. And in Australia, well, in the case for crypto, probably the lack of laws and clarity around what we can and can't offer. Right. So for us to offer a banking style yield or something like that on deposits would fall under something that we couldn't do, right? Because, that would put us in financial services stuff, which we're not currently don't have laws to, we can't really provide that and not get ourselves sued by ASIC.
You need to get a license.
Yeah, and the licensing regime in Australia, which is probably another thing to talk about, doesn't exist quite in Australia. And there's a bunch of reasons we should talk about that at some point. And look, I'll be here all day about the frustrations that our industry has with the lack of, I guess, regulation and, laws that have been passed in Australia to really make these distinctions clear. But the point I'm trying to get to is being the native currency of the internet now, you have access to all kinds of platforms and services which are not in Australia. And they don't have such reservations about offering products and yields and all these types of stuff, whether it be derivatives or whether it be yield, all this kind of stuff. Right now, and I won't mention the names, but you can log on to a bunch of international exchanges, deposit your crypto tokens and start earning a yield, right?
Which is essentially earning interest on your
Essentially
assets.
interest on your crypto deposits. Now, the big question is, if something goes wrong there, naturally you might say, well, where's that yield coming from? And they are subject to different laws and jurisdictions that we are, and maybe they don't have to tell you. And some are probably doing it through robust means. Others might be doing it through less robust means. They're also unregulated platforms. So if they stuff up, you can't really go crying to the government of Malta or someone like that if that's where they're domiciled. Look, I don't know. And this is the real where the gap is. These products exist. Exchanges, international exchanges, a bit like Independent Reserve, exist that offering bank-like services, but they can offer it for the fact that they don't have to answer to the Australian government, right? But if they do, it's going to be very difficult maybe for the regulators to have any jurisdiction over them. they can probably say, hey, don't use these people, but it's the native, unless they can somehow figure out a way to block Australians from using these offshore platforms, it's actually very difficult for them to enforce it. So where I'm getting to with all this is, as an Australian business, we would love to be able to offer more things. But first of all, before we get into more we would like to offer, we'd like a licensing regime which made it super clear what we can and can't do. But more importantly than that, a regulatory framework in Australia would actually go, well, look, here's some minimum standards that need to be in place for security of, like, not just cyber security of how, you
Capital,
interact,
holding
KYC,
capital.
how you do custody and the security, what protocols you have around your cold storage solution, all these types of things that we take seriously in Independent Reserve. We spend a lot of time thinking about. But without the fact that there's any regulation, you're kind of just relying on individual businesses to be good guys, right? Because we've taken a lot of effort to put in our cold storage. So we've never had a hack, we've never had a breach. But there can be someone else who's set up, and just by pure fortune of the fact they haven't had a hack, but they might have, instead of going through the effort that we've gone to for cold security, may just have it saved on a USB stick in the CEO's drawer, right? They're both Australian businesses, and there's nothing in the law that says, okay, as Independent Reserve, you have 95 to 98% of all your assets held in cold storage in devices in professionally managed, secured locations, geographically dispersed around Australia. Military level security going on in these vaults. The whole shebang. You need pre-authorization to go there. Biometric scanning to get in these places. That's what we do, versus someone else there. But the law says both are fine, right? And as an average consumer, it sounds absurd to us. We have over $1 billion worth of customer assets that we're securing on behalf of customers. And if they want to take them off the platform, that's fine. But if they want to leave it with it, we need to make sure that's super secure. But right now, it's crazy to think that all the effort we go to versus all the effort someone else goes to is just the fact of the regulatory void that we have in Australia means these two service providers can sit side by side, and the average consumer doesn't know which one to go with.
Absolutely. Yeah, I think it's critical, right? And the Clarity Act in the US is certainly laying a legislative environment to say this is the rules of play here that you need to be able to do if you're going to be operating in the US, which is great. I think in Australia, if we do talk about the regulators, ASIC obviously have had an engagement around that. They've got InfoSheet 225 that is sort of outlines their approach to digital assets. They've sort of indicated that they're working on an Australian financial services license for digital assets, and that's likely going to come out maybe even this year. But there still seems to be a bit of a disagreement between Treasury and ASIC around the right approach. Politicians are starting to show a bit of interest in it. They can see that a third of Australians own crypto, and suddenly they start seeing votes in that, so they're paying a bit more attention. But it's not forming any real policy narrative from them yet. And so it feels like it's so close, but it still feels like it's so far away. And the challenge is that, you've got Trump coming in, with the Clarity Act, and a couple of things that he said. The report sort of said, I'm just looking at my notes because I wanted to get the quotes right, but they're aiming at creating a golden age of crypto, right? And delivering Trump's promise to make the US the crypto capital of the world. And this is our competition. We are in competition as a country with the US around innovating in this space, creating businesses that benefit our economy and our people. And we're already seeing a massive flight of talent out of Australia because our regulatory environment is so constrictive, and so we're just lagging other jurisdictions like the UAE or Singapore and now the US. So if you had to guess, when do you think we're going to get our crypto week, in Australia? How long is it going to take?
An ongoing joke, and I'm sure you've heard this one in the crypto industry, is regulation is always 18 months away. And they said that 18 months ago, and they said it the 18 months ago before that. Now, we were close. Here's the thing I can tell you. We were close. So before Labor came to power, Senator Andrew Bragg had done the work and had put together, he had formalised effectively a policy that he was going to take. Libs got chased out, and Labor came in and said, okay, well, whatever they did, forget it. And they had said that they would get something in place before the last election. That didn't occur. They went to the election, and we had, I can't remember his name, Andrew Charlton, I think, came to a crypto event and said, we're going to this election, and we've got a policy for you, right? Sounded great. Again, it doesn't seem to be high on the policy agenda. And look, There is the DECA, which you know, so the Digital Economic Council of Australia, which represents largely blockchain tech, they've worked hard, they worked tirelessly, and I know there has been much better engagement at all levels with the governments. Fundamentally, ASIC just is to enforce the laws. The politicians are the ones that need to create the laws. Treasury needs to come up with this, and politicians need to create the legislation to get through. Right. So we've been promised it a number of times. Look, there's nothing tabled to go as we speak. I don't believe there's anything tabled to go to the House of Reps for a vote.
Yeah.
So we're still pretty low down the policy agenda.
Yeah.
So, there does seem to at least be an acknowledgement that there is a lot of innovation and technology, a lot of innovation and a lot of capital and talent that we can draw by having some clear regulatory frameworks. But it just doesn't seem to be enough that people are taking it seriously, even though they can see Trump made it a priority in the US.
Mm. Yep.
In Singapore, they had it. Like, we were the first. They have a licensing regime in Singapore. We, as Independent Reserve, as an Australian exchange, as an Australian business, we've always focused on doing things. Even we're actually, funny enough, I have to say, because we've been around for 12 years. 2013, we launched 2014. Now that was 2 years before Coinbase, right? Nearly 6 years before 5 years before 6 years before Binance. So we've been doing this a lot longer than a lot of large global exchanges. And we expanded to Singapore. We're now expanding into places like Hong Kong and Dubai, and we're doing well. We're happy with that, but we've always done it with a little bit of a slow, let's do regulatory approach first. So we were the first exchange to get a license in Singapore. Now, what's crazy is that we were the first of like 170 global exchanges to get a license in Singapore. So we're like, great. We've got that. And not only like the day after we got that license in Singapore, we couldn't get solid, reliable banking partners. The day after we got that license, hit us up and asked us if we want accounts. And my point we're trying to highlight that is that when you have really clear rules of play, I think the term you use, which is a great term for it, just the rules of the game, people know, okay, these guys are following the rules and they meet the standard that we expect. All of a sudden, bam, people flock and want to do business with you. Right? People are happy to put capital with you. People are happy to invest in you. The same thing would be true on the sort of, I guess, the macro scale of business in Australia. You come up with the rules of the game and bang, everyone wants to start coming and playing because they know what's in, know what's out. They know who they can trust. They know who they should avoid. And it just seems that we just it's, the crypto week, the bit that would be so good is just going, hey, we've got rules of engagement. Even if those rules of the game aren't perfect, because you can always adjust them. Just having those rules of the game, which is bringing so much attention. And that's the real frustrating piece. And I don't so again, I know your question was when. Again, I guess I'm going to have to say 18 months because that's kind of all we can go with.
Yeah. Well, look, I hope you're wrong.
I hope I'm wrong too.
But yeah, I suspect you're not. And look, thinking about the audience for this podcast as well. This kind of encapsulates the challenge for the wealth industry as well, and any financial advisor. In that they are operating in a highly regulated environment. What they say really matters, and they have to be really careful about what they say because they have a lot of liability around that. And when the rules are unclear or insufficient to provide clarity, and there's too much gray zone, they really struggle to engage and they don't know how to engage. And I think that, and what I observe with that is because of that uncertainty and, they don't see the compelling need or the sense of urgency to come into the market because they know they can't really play in it. So they don't stay across it. They don't understand all of these other things we've been talking about around how rapidly this is changing and how fundamentally it's reshaping their industry. There's no conversation happening within those industries. I'm a member of the peak bodies. I go to their events. There's nothing about cryptocurrency being discussed at all, and really hardly anything about blockchain being discussed as well. And so, they're getting further and further behind. And at some point, that gap is just, I mean, the problem with that gap is that it's the retail investor that is paying for a trusted advised relationship who's basically being told either don't do it, it's too risky, because it's too risky to the advisor to say anything other than that, or they're saying, you're going to have to go and do it by yourself, in which case they're then exposing themselves to, that unregulated international potential players where there are a lot of pitfalls and risks that they're being exposed to. So bridging that crypto service gap that, I've been really focusing on, obviously. What do you think, and we should probably finish on this given the time, but what do you think are going to be the main things that you would say to a financial planner or an accountant how can they bridge this crypto service gap? How can they position themselves for the future and provide the best service, but in a way that isn't compromising their PI insurance or their licensee agreements?
Yeah, look, absolutely. We've thought about this for quite some time, and we have hundreds of quality relationships with a lot of advisors, and the message is consistent. Clients come to them and they say, "Would love to do Bitcoin," and they're like, "Hey, I just can't touch it. My PI, it's not on the APL. It's not something we can touch. Like, if I put a recommendation around this." Like, I'm on my backside's on the line for all this, but they know their customers want to do it, and a lot more advisors, just from the general types of conversations we've been having with it, have gone from very skeptic to very open to it, to the point where they're going, "Look, hey, I've got no problem with it personally. In fact, I own some Bitcoin myself, participate in some DeFi myself, but I just can't advise you on this. It's not in my wheelhouse. I have my insurance for it. I don't have the expertise for it." And so what they're saying to us is that we just want to be able to do we want to be able to have some oversight over the portfolios, or oversight of what our customers are doing, and just know that they're going with someone trusted. Just know they're going with someone who can help them through that, because the reality is that there are scams exist, and people will use crypto as a method to kind of bamboozle people into tricking them into some deals that are too good to be true. So advisors want to know from the conversations we've had that wherever they go, that they can kind of just have a secure environment. And so the vast majority of people that we see, I guess, participating that have an advisor attached to them tend to be the SMSF market. So people who are advising on SMSFs, and their customers typically want to just buy and hold Bitcoin. There are those, there are those cases where people want to participate in DeFi and all this type of on-chain activity, which is, again, a whole nother minefield. But for the vast majority of people, it's just, how do I securely buy and hold Bitcoin? The simplest way to do that is to have a relationship with, candidly, someone like Independent Reserve, and particularly an Australian business where the assets are here in Australia. You're dealing with an Australian company with Australian directors, and you have a local team that can help onboard them. And for the vast majority of people, the simplest option, the most secure option, is actually, sometimes just leaving the money on the exchange, so it's not going to get lost. You've got a trusted place where they can hold their Bitcoin securely. I mean, for the people who are more developed, yeah, absolutely, go and maybe self custody, but that's very much it increases the risk a little bit, because all the custody issues are now on the trustee. So generally speaking, with an Australian exchange that can handle that and keep it securely for them. So what we've done, I guess I could talk about what we've done for that, is we completely understand the challenges for advisors. And for the most part, what they kind of say to us, we just need to know what's going on. So we've built some product, particularly on our platform, like an advisor. We have an advisor only, I guess, accounts, where advisors don't have necessarily the ability to transact on behalf of their clients, so they can't be sort of accused of advising on or transacting on, but they can have an oversight of their customers' accounts, so they can help them. They can see the funds are there. They can, when they're doing their portfolio summary at the end of the year, they can log on and be like, "Oh yeah, I've got 5 clients. I can see they've all got their Bitcoin there. I can see the value of that Bitcoin. It's all there." And so they can incorporate that into their visibility of those crypto holdings, just like they have visibility over their shares and their cash accounts. And we're working closely with people like Class and BGL to provide the data integration into existing financial service software as well. So that, at the end of the year, when you're running your SMSF accounts, you're not just handing over that CSV file. We can send that data through. So your traditional service providers, but also we have a relationship with Iris. So if you're on Xplan, I mean, you can have that portfolio data even sent to your Xplan software as well. So those are the types of things that we're sort of finding have really helped bridge the gap. And it's just allowing them to have oversight without necessarily participating. So crypto doesn't become this black hole, because quite rightly so, yes, the advisors say, "Look, hey, you want to go with Bitcoin, but hey, just go talk to Lee. He'll set you up. Talk about the different security options that you have. And at least then at the end of the year, then I can have a look at what's going on. So when I'm making my plans for your portfolio, there's not this big black hole of what's happened with crypto." And so that's just allowing, advisors to at least, like I said, have oversight without necessarily being involved in that process, so their clients can securely get access. Hopefully that makes that's definitely what we're doing.
Fantastic. Well, look, I could see why you're the national head of sales, Lee. That was a great little pitch there.
I guess subliminally I've done it a few times. Hey, so we independent reserve, we're expanding overseas, so I've got to modify. I guess I got to adjust that for different markets now as well.
Yeah, fantastic. Yeah. And look, yeah, something that we've been working on. So, I think that integrating into the systems that accountants and financial planners use on a day-to-day basis is a critical component of them raising their awareness of crypto and how many of their clients have it and how well it's performing, and it helps them protect their holistic relationship with their clients. So I think that it's a great starting point. And then as the legislation catches up and their regulatory environment becomes clearer, hopefully they can then start engaging with it as an asset class and start helping their clients use it like they might use any other asset class. So that'll come in time, but getting visibility, and I think the other thing I would add is also education. So learning about it, but getting informed, staying across it, because as we've seen with stablecoins, as we've seen with so many other new technologies, even beyond Bitcoin, crypto and blockchain, it tends to go slowly, and then bang, when it hits, it just goes hard. And it's pretty clear that when you've got a third of the population already holding crypto, that as soon as the advised industry opens up from a regulatory point of view, it's going to hit the industry overnight. And if you're not on that front foot, if you're not at the starter's block and ready, then you're just going to get left behind pretty rapidly. So it makes sense to prepare now, get on the front foot, understand it. Not about selling products and at this stage. It's just about getting your rails in place, understanding what strategy you're going to take as a practice, and making sure you understand what's happening in the asset class.
Yeah, absolutely. Yeah, absolutely. I couldn't agree more. I mean, I really just want to emphasize, the rate of change in this industry, that it's just unlike anything you've seen. It's like I said, it's the most relevant analogy is really to compare it like the spread of the internet, because it is a technology that is native to the internet. It goes hand in hand with the internet. And as quickly as the internet has spread and became pervasive in people's lives, crypto technology is on that same trajectory. And it happens so quick. So yeah, the more you can do to keep yourself educated, you don't have to be up to date, but really just have a plan to know who to deal with.
Yep.
I guess would be the number one tip. Yeah. If you're not going to do the work yourself, but you match up with people who do.
Yeah, absolutely. 100%. You don't need to be the expert, but you do need to partner with experts. Is a key summary there. And look, we could keep going all day on this. I mean, there's so many other pathways I'd love to explore with you on that. Even like, AI, you're saying crypto's a native currency for the internet. It's a native currency for AI, and that's a whole nother wave of change and driver. We could have a whole nother episode on that. Maybe I'll get you back to talk about that at some point. But and there's so many other things, but time is against us. So
Till next time.
let's probably need to wrap it up. But it's been fascinating. I really enjoyed the chat. And it's great to sort of be able to talk to someone, with the depth of knowledge and the experience, who's actually can talk about it, because you've got the tenure. It's great, your wealth of information. So I really appreciate you coming on.
Absolute pleasure, Andrew. We'll see you. I'm sure we'll catch up again soon.
Will do. All right.
See you, Andrew.
Thanks, Lee. Bye.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.